Our next guest is looking at which big tech names are the most exposed and which could be and actually hold up better in this kind of environment. Patrick Moorhead is the CEO and chief analyst over at Moor Insights and Strategy, a person we'll talk to about kind of the tech landscape as it's unfolding. And Patrick, I guess the question I have for you is, given everything that we've seen with regard to the damage in certain parts of the technology sector, is there any reason for medium to long-term pessimism? It just seems like this could be a blip on the radar right now.
Yeah, I think there's a great reason. I don't think the full force of the tariffs from China, our tariffs on their goods have completely hit home yet. And we're looking at it from two vectors and really fundamental, right? Increased cost of goods from tariffs and increased CapEx amortization that hit the bottom line, and then a decrease in consumption from higher prices. And the companies that the tariffs have really not been fully factored in are Apple, right? If you truly believe that the price of an Apple good could go up by 150% from a cost basis as it comes across the border, that's catastrophic to a company like this. And then you have companies that make notebooks. All companies who are making notebooks, it's built in China and will get hit with the full weight of that. There are some certain sectors, though, that I think midterm to long term are very good. I think the entire AI trade up and down is a good bet at this point. That is not going to change. You will have continued build outs of hyperscaler data centers and enterprises. And thankfully, most of those goods are covered by USMCA as they are manufactured in Mexico. But if we see some tariffs on semiconductors, literally all bets are off, and you will be seeing a lot of red in all of big tech.
I like the way you put that kind of so binary, Patrick, just to help us all capture this moment. So you say you think you could buy everything in the AI trade right now unless tariffs go on semiconductors and then all bets are off.
That's exactly right. And the reason you're not seeing all the hyperscalers get clobbered is most of their goods are at 0% tariff because their servers are manufactured primarily in Mexico, which is covered under USMCA. But yes, it will be a very big and deep red scenario if semiconductors are tariffed.
Most at risk, you think, could actually be a company like Apple right now. Is that right?
Right now, that's right. Even without a tariff off semiconductors, if you look at the way that their business is structured and how much of their manufacturing they do in China, we're not talking about a short term, hey, I have to make this shoe in a different country. It might take me 6 months to get set up. To significantly move volume from China to, let's say, Vietnam could take 3 to 4 years. It takes 1 million workers in China, which, by the way, Foxconn has to import workers from Malaysia to have enough workers to create those iPhones. It would take years. And the other element of this is it's not just planning a factory. You need the entire supply chain to plant their flags and build their sub-assemblies around that. And that takes years with a product like an iPhone.
So Apple is one of the most at risk, both because of the supply chain, also because of there's recession risk here. Least at risk, Microsoft, we've talked about that. The semis, if you like you said, if they're not tariffed. And then a lot of the SaaS companies you think can kind of skirt this.
That's exactly right. And I keep reminding people that SaaS and software are not tariffed yet. Europe is threatening that they could put a tariff on U.S. services, which, again, would be adding cost to it. But I think now that we're at least talking with the EU, that's low likelihood. But if you look at the ServiceNow, the SAPs, Oracles, IBM, Netflix, and Zoom, they aren't going to get touched here. And I do like Microsoft a lot. It is the minimal exposure because it has minimal products that it pulls over. It's about 2%. And let's assume all of those are made in China. And they have business services that companies can't turn off, right? You're not going to turn off Microsoft 365. You can't just turn off an application that you've developed to put on top of Microsoft Azure. That's just not going to happen. So it's very durable even at times like this in a worst case scenario that we go into a recession.